Hey there, quick question. Have you chosen the business structure that will help your business thrive, or one that might hold it back? See, starting a business is exciting, it's invigorating, but picking the right structure, well, that's where things can get kind of tricky. Choosing the right structure is more than just a legal formality. It affects your taxes, your liability, your business growth. So whether you've just started out or you've been in business for years, let's break down the options so that you can protect your assets while keeping your wallet and your sanity intact. First up, the sole proprietorship. It's the most straightforward. No state registration, no extra paperwork, income goes straight to your personal tax return, and you can write off business expenses. But there's a catch. There's no legal distinction between you and your business. So if something goes wrong, like getting sued, yikes, your personal assets are on the line. It's easy, but risky. Next, the general partnership. You got a buddy who's in on the action, well, congrats. You now share the profits, the losses, and yes, the liability. You're like a dynamic duo, but if one of you messes up, you both get to deal with it. It's important to have a solid partnership agreement in place because when things get hairy, you don't want to be left figuring out who's responsible for the oops. Now, let's step it up a notch with limited partnership. This one's perfect if you need cash and someone's willing to throw money at you. The general partner, you, runs the business while the limited partner, them, invests money and doesn't deal with the day-to-day. The best part? Limited partners are only liable for the money they've invested. So while you're handling all the stress, they're sitting back, knowing their assets are protected. Fair? Maybe not. Useful? Definitely. Moving on. Limited liability partnership. Now, this one's for the pros. Think law firms, accounting offices, or your local animal clinic. It's sort of like business insurance for partners who might cause trouble. With an LLP, if your partner messes up, say they get sued, guess what? It's on them, not you. So you can sleep soundly knowing that your business stays safe and your personal assets are secure. Now, the S-Corporation. It's like mixing the protection of a corporation with the flexibility of a partnership. It's an especially popular choice for small businesses. It offers liability protection, avoids double taxation, and profits are passed directly to the shareholders. But there are restrictions, like a cap of 100 shareholders and all must be US citizens. Sorry, international friends, but seriously though, S-Corp is great if you're keeping things local. And then there's the C Corp. This is big time stuff. Want to grow fast, sell stock, and even become the next big thing? Well, C Corporation might just be your jam. A C Corp operates as its own legal entity, which sounds perfect, until you've hit the dreaded double taxation. Yes, this company pays taxes on its profits, and when you, as the shareholder, receive dividends, you get to pay taxes again on those earnings. Fun fact, right? It's a trade-off for sure, but the ability to grow and scale make it worthwhile for larger businesses. Food for thought. Finally, the limited liability company. An LLC offers personal liability protection with the flexible tax options. They can opt to be taxed like an S-Corp or C Corp, and here in Tennessee, it's especially popular because there's no state income tax. That's a big win. Just remember, you're the sole owner, so the IRS treats it like a sole proprietorship unless you file paperwork to change that. So what's the takeaway? Well, the right structure depends on your goals, your vision, and honestly, your risk tolerance. If you're unsure, don't guess. Reach out to a professional for guidance. At Patrick Accounting, we're here to help you make the right decision. And in the end, the most important thing is to make sure you're doing what's best for you and your business.